Welcome, dear traders. As the third week of October comes to a close, stock indexes in Australia, Japan and China closed the week in the red. Asia-Pacific markets were supported by negative signals from Wall Street. Rising US Treasuries yields also weighed on global equities. The inflation rate in the United States is still too high, and the current monetary conditions are not too tight. These were the 2 points made by the head of the U.S. Central Bank in a speech at the Economic Club of New York, and the remarks shook the stock market yesterday and increased the pressure on the U.S. dollar. Other U.S. Fed speakers also maintained a hawkish tone in their comments. Jerome Powell's words only summarized the last line. From yesterday's speech, it became clear that the prospect of raising interest rates remains. However, Powell also noted that the central bank did not plan to raise interest rates in the short term. Therefore, 100% of the market believes that the Fed will unlikely make a rate hike in November. As the FEDWATCH tool shows today, more than 98% of the market is pricing in this possibility. However, 1.7% still believe that the Fed will raise rates by a quarter point on November 1st. Also, the Fed chief said that rising Treasury yields support a more hawkish stance on the interest rate. For example, the yield on a 10-year government bonds tested the threshold of 5% yesterday for the first time since 2007. High yields are not going to eliminate the risk of inflation, since yields growth in Asia seems to have paused today. Much will depend on the incoming economic statistics and the state of the labor market in the United States. The US dollar faced high volatility and generally experienced a negative trading week. Over the past 24 hours, the US currency has fallen from its weekly high of 106.60 and 106.10. Most of this decline reflects the market's reaction to the comments made by the Fed head. Meanwhile, the US Treasuries are still hovering at very high levels despite retreating slightly. In addition, the greenback continues to receive support as a safe haven currency in this connection. Increasingly worrisome geopolitics will continue to provide global demand for the US currency. The US economy is a potential weak link in this chain. However, the US dollar will win in every scenario. Now the US economy is in a good shape, and this is one of the main reasons for the inflow of assets into the country. However, the dollar will be supported by the Fed's hawkish policy even if prices continue to rise, and the labor market in the United States remains tight. Therefore, the US dollar index was maintaining bullish momentum within the trading range of 106.20 and 106.40 in the Asian session. The dollar-yen pair has been showing mainly green figures this week. However, for the yen, this means depreciation against the US dollar. Today, the Japanese currency almost hit the critical level of 150 in the Asian trading. The yen's fall was primarily due to the record rise in the US Treasury yields, as the currency is very sensitive to them. Today, it was also expected without the upcoming speeches from Japan's finance officials. After so many daily statements from the Japanese authorities, there is no doubt that they are monitoring the yen's exchange rate online. And this time the statements were made by Finance Minister Shinichi Suzuki. In addition, the official once again refused to comment on his department's reaction to the currency's movement in the forex market. However, regular verbal interventions do little to support the yen. As a result, the dollar-yen pair has seen fairly steady growth in recent days. In the Asian trading session, the US dollar continues to put pressure on the yen within the daily range of 149.60 and 150. The Australian dollar is also under pressure at the end of this turbulent week. In the early Friday trading, the Aussie dollar pairs range of 0.6298 and 0.6332 was slipping into the bearish territory. As we can see on the chart, after Jerome Powell's speech, the Australian dollar took advantage of the weakness of the US dollar yesterday. As a result, its price jumped to 0.6350, and today, under the influence of a lower risk sentiment in the global markets, the Aussie dropped and almost touched the psychological support level of 0.63. In general, the Australian currency is suffering losses for the third day in a row. The New Zealand dollar has even less strength to withstand the greenback. Since Monday, when the Kiwi stood at 0.5930, it reached new lows early Friday. As a result, the New Zealand dollar was trading within the range of 0.5817 and 0.5856 and still maintained bearish momentum in the Asian session. Thus, its losses may amount to 1% or more during the week. And that's all for now, but keep in mind that the market is changing constantly. Subscribe to the InstaForex TV channel, leave your comments and questions below, and we will be happy to get your feedback. See you online next week.